In this video, I'm going to show you how to identify and trade double bottoms and double tops in Forex and indices. Trading double tops and double bottoms can be both simple and profitable. You only need a few tools in your trading arsenal to trade double tops and double bottoms. It also works across all time frames. The problem I found when trying to learn how to trade double tops and double bottoms was that everyone seemed to be an expert showing me them on historic price data, but no one truly showed me how to identify them as they formed. In this video, you will learn how to spot them as they form. But first, let's go over why they work. They work because quite often traders wait for confirmation that a support or resistance level is holding before they are willing to enter a trade. After it has been accepted once, the first touch, more traders can easily identify the level and are willing to commit their capital on the second touch. Here, we see the level holding and we get a reaction. Here, price returns and more buyers are willing to commit. Here, we see the level is holding and we get a reaction. And here, price returns and more sellers are now willing to commit. To trade double tops and double bottoms, you will need support and resistance, candlestick patterns. For the purpose of this video, we will use pin bars and engulfing candles because they are easy to identify. We will also need a crooked shoulder. Support and resistance. If you don't have a good understanding of support and resistance and how to plot it, please watch my video on the subject. There should be a link for it on your screen now. Candlestick patterns. If you don't know the best candlestick patterns to use when trading, you can click the link on the screen now and watch my video outlining them. And finally, a crooked shoulder. A crooked shoulder helps make trading double tops and double bottoms higher probability. We are trading on the premise that the second touch is where more buyers or sellers are eager to jump on the move. For this reason, we want to see a higher second touch for a double bottom, and we want to see a lower second touch for a double top. This suggests we may see a stronger reaction for the second touch. This is higher and is a good double bottom. This is lower and is not a good double bottom. This is lower and is a good double top. This is higher and is not a good double top. Now let's jump onto the charts and I will show you how to identify double tops and double bottoms, how to pick the ones with crooked shoulders, profit targets, and how to set your stops. Okay, we're on the Euro-US dollar. I'm going to take you through a few different pairs and a few different time frames, just to show you that it works across different markets and also different time frames. First thing you're going to need is support and resistance. Now, when plotting your support and resistance, if you're going to start learning new trading techniques, it's important to do it in a specific way. What 95% of people out there do, certainly in all the videos that I've ever watched, this is what they do. They load up their chart like this, they click on their support and resistance lines, they put them in the chart, they take into account everything on the screen here, and then they'll take you through the methods that they're talking about, and they'll say, look how well it works here, look how well it works here. If I'm using all of this price data and setting my support and resistance lines to this price data, of course it's going to work perfectly. You know, I'm going to have a line right here for this resistance line, right here. And then when I go into the chart and show you it, of course that's going to work perfectly because we've set it perfectly. What you need to do is you need to set this up as though you are trading to the right of your screen. So, you know, in real life, you set your support and resistance lines and then you trade in this area here. The way to do this when you're backtesting and when you're practicing is just set an area on your screen. And we'll take the 1st of December 2015 for ease. So this part of your screen here, this is going to act as our future. So when we are setting up our support and resistance lines, what we do, we come left like this, and we don't take into account what's on the right hand side of the screen there. So what I'm going to do now is I'm going to pick out support and resistance levels. I'm just going to do it relatively quickly. If you don't know how to pick out support and resistance levels, you can watch the video. For the purpose of this video, I'm not going talk you through it. I'm just going to plot them relatively quickly. I'm just going to take the main ones also. So I'm just picking out the important ones. There are more in there. However, for this video, we're just taking the main ones. Okay, so we'll put one there also. Okay, so that's us picked our points. So now, let me just delete this. When we are looking at this, we're going to be doing the 1 hour time frame for this first part of the video. Here's our line, our vertical line, which signifies 1st of December. We are not trading before then because that is where we used, that's the price data we used to set our support and resistance lines. So we're in the 1 hour time frame now. All we're looking for is, first of all, we're looking for a touch on our support and resistance. This is our support and resistance area here that we've marked. We're looking for a touch, the market to push up, and then the market to come back down again. Now this isn't a perfect setup, so I'm going to ignore it. However, if we come across here, the market is coming down. This is exactly how you identify double bottoms. The market came down here, it's touched into your zone, you're now paying attention, the market pushes away, and then when it comes back down for its second touch here, this is when we become interested in trading this as a double bottom. So what are we looking for? The first thing we're looking for is our second touch on a double bottom should be higher. The way to check that, we're looking for the lows of the first touch, so 10,802.6. You can see the lowest touch here is 10,805, so it's a higher second touch. That is our first confluence. We've came down, we've made a touch, we've bounced off, we've came down, our second touch is higher. The second thing we're looking for is our signal candle. Here is a pin bar. As soon as you see your signal candle, you're on alert. Your entry is, for me, I always enter above the high of a signal candle. So once I see the signal candle, I'm entering the market above the high. For double bottoms, our first target is going to be, I'm just going to draw this in so you can see it easier. We came down, we touched, we pushed up, we came down again. This is our second touch. We enter above the high of our signal candle. You can see the market pushes away. Now, first target for these trades is the center of the W. So we have the first touch and the second touch. This area right here in the center is our first target. We enter above the high of this candle. When the market gets up into this area, you have two choices. You can either close your position up here if you want, or you can close out part of your position. So you could close out 50%, 75% of your position and let the rest of it run. First target is here. Your second target, really you want to let your profits run as much as possible. To do that, you can look to previous highs. In fact, let me draw this in a little bit simpler. We can look to previous highs right here. You got highs up here. And this is what you would be looking at. First target is the center of the W. For me, I'd always lock in profits here, lock in 75%, and then let my profits run, aiming for previous highs. You can also, as the market is moving up towards your second target, you can look for candles that are signifying it's time to get out of the move. You can see strong candles here. It's telling you to stay in the market. The market moves along. You can bring your stop up as it's moving to the bottom of these significant candles. See this very large candle here, bottom of this candle. Then you get another large candle here. bring your stop to the bottom of this candle, and etc., and follow it up. Once you've locked in profits at your first target, you really want to try and let your profits run as much as possible on the second position. So we're looking for the exact same thing time and time again. You can see we've got a double bottom right here. However, we don't have a support and resistance line here, but it would align to your rules. I've just done these support and resistance lines quickly. There's a double bottom there. See if we can find another one. We come down here, we touch, we get a lower touch here, so we ignore it. Lower here, so we ignore it. And we're just looking for our good signals. This is one right here. We've come down into our support area. The market then pushes off. As soon as this happens, you're on alert. First of all, you have your alarm set down here. This triggers your alarm. You see it pushing off. You set your alarm back down here again. As the market comes back down, you're looking for your signals. Do we get any signals on this one? I can see a pin bar right here. This would be your entry. Entering above the high of the candle, your first target, the center of the W. So right here is where your first target would be met. Now also, when you're entering these trades, you're entering on a higher second touch for a double bottom. So our stop should always be below the first touch. It makes sense for your trade. If the first touch is the signal and we're trading off of the second touch being higher, then we want our stop to be below the first touch. If the market starts crashing through there, it means our trade is incorrect. Market pushes up. We reach our first target, close out partial positions or close out your full position if you want. It's completely down to the individual trader. And then if you want, you just follow up with significant candles. You have one here. Market comes down, you get another one right here. Your stop goes here. You come up, you get a significant candle here, significant candle here. Your stop would be here. And there's not really another significant candle. You could argue this is one, but we'll just say here, the market comes down and stops you out. Now, what do? We fall back down again. You get a double bottom there, but really your first target is going to be here. It's not an ideal trade, to be honest. If you're trading this live, it's easy to see this and say you should take this. This is another thing that lots of people out there will say. They'll see this and they'll see this and they'll say this was the perfect trade. You should have taken this trade. However, if all I can see is this is not a trade that I would take. So it's not one I'm going to advise you to take. What do we get? Do we get any signals up here? You get a double bottom there. It's got a lower second touch, so we're ignoring it. You come up, you touch. You only get a single touch up here at our resistance line. So what I'm actually going to do, I'm going to look for some double tops to take you through these. And there's a double top there. It's not on our support and resistance line. And up here. Okay, so it doesn't appear to be a good double top here. Let me just have a look. I don't think we've taken enough price data to find this. Okay, so we don't have one on this time frame on this pair. It's okay, we'll find one on the next pair. I have no doubt. I'll bring up another pair. I'll do the 1 hour time frame again, and then we'll change time frames and we will change pair. Okay, so now we're on the Australian dollar, US dollar. I'm just going to do the exact same thing again. I'm going to mark our future. This is what we can't see. It's from the 1st of December again, just keeping it the same. And then I'm going to mark in support and resistance. I'm just going to do it quickly. Okay, so let me just make sure. So we do go up a little bit higher. I'm just going to mark it a little bit higher. Okay, so we'll take it up to there. All I'm going to do is go down onto the 1 hour time frame again, doing the exact same thing again. So here is where we're starting. Hopefully we will see a double top. No doubt we will. If we look here, first of all, we come down, we touch, push higher, we come down again, and then up we go. So signals, you got pin bar there, you've got an engulfing candle there. Stop is below the first touch. Our first target is the center of the W right here. Now, once we touch this area right here, and this wouldn't actually be a good signal candle, this one here, because it is into the first target. So we take the pin bar, market pushes up, reaches the first target. We're then following up as normal, significant candles, significant candle here, market comes down, significant candle here, market pushes up, market starts to come down again. We've broken through a resistance line here, so we break the resistance line, come back down, we bounce off of the resistance line. Where is a good area to bring your stop to? If we've broken a resistance line, it would be the resistance line. Let's have a look, see if we can find some more. I really would like a double top. I can see a double top here, but there's no, there's one touch, two touches, but we don't have a signal candle. We come down here, just breaks through just a little bit. This is a good double bottom. It just breaks through our support line just a little bit. Too much for me. I wouldn't really have taken it. But we come down. We push all the way back up. We come all the way back down again. And then up we go. Happens over and over and over again, guys. It's really what you should be looking for. Here's one here that we ignore. Lower second touch. The market pushes up. Drops back down again. It's our first touch. We push back up again. Do we get a lower touch? Yes, we do. Do we get a signal? We get a pin bar right here. Where's our first target? Right here. Market falls down. We get our first target. Close out partial profits. Where is our second target going to be? We've got previous lows down here. It's also right on our support line. So you don't even need this line, to be honest. You follow it down with significant candles. It reaches our previous support. It's exactly where the market turns around. Let's have a look. We'd follow it down with significant candles. One here. One here. There's one here. That'll be this candle here. And then you get stopped out there. That's how you let your profits run. It's the exact same for a double top as it is a double bottom. The only difference is you're selling instead of buying. Your stop is above the high, first touch high, rather than the first touch low on a double bottom. Let's just have a look, see if we can see any more. We started rallying all the way up here. And then we break through here. What do? We come down, push up, come back down again. Is the second touch higher than the first? Yes, it is. There's our low on the first touch. There's our low on the second touch. Do we see any sort of signal candles? Pin bar right here. Stop goes below the low of the first touch. Our first target is the center of the W, which is right here. Market comes up, lock in profits, looking for significant candles. Significant candle there. Stop goes below. Significant candle here. Stop goes below. Significant candle right here. Stop goes below. And this is where you get stopped out. This is why it's really beneficial to let your profits run. You know, you can have 33 points, or you can have your second position run up to almost 70 points. If you let your profits run, it will help increase your profitability a lot. So we've done both double bottoms and double tops on the 1 hour time frame now. And what I'll do is I'll bring up a different market and we will do another time frame. Just so you can see it's the exact same on all time frames and all markets. Okay, now we are on Euro GBP. We are just going to do the exact same thing again. Taking from the 1st of December, that's when we've decided this is going to be our future time frame. Now when you're doing this, it is important to have a rough idea of where the price action goes, just because, you know, if we pull the screen across and just focus on this area of support and resistance, when we come to test this, we're only going to have this small section of price action here. You know, so we know it goes up to around about 7,900, and we don't really want to focus much below 7,200. So that's where we're looking. Now we're just pulling ourselves back and we are plotting our support and resistance lines. Now, let me just start this off. When you're plotting these, this is also a good way for you to practice your support and resistance. If you struggle picking out good areas of support and resistance, and this can be your method for backtesting. You know, you can't see to the right, so when you've plotted your support and resistance levels, then you can scroll forward and you can see how it works. All I'm doing is picking out the main ones. I won't pick out them all, to be honest. Let me just make this a little bit bigger. It's a little bit difficult to see some of these. Oops. I'm just picking out the main ones. Got one there. Oops. You can spend a bit of time doing this. Just get the next one. And for the purpose of this video, though, you know, we're just taking the main ones. Round about this one, round about there. We have one here. Round about here. If you've watched the support and resistance video, you know, I'm doing exactly what I instruct you to do on that video. It's the exact way I do my support and resistance levels. And I find it to be very effective. Okay, so we don't really need to go down too much further. Let's have a look. So we'll just go down a little bit more. Just pick out the main ones. Got one round about here. Okay, so that'll do us. Now, we'll do the 15-minute time frame for this one. We're just scrolling in. We're pulling ourselves back until we see the vertical line. And then all we're doing is the exact same thing again. Oops. Okay, so just scrolling forward. Now you'd have your alarm set. You can actually see the market comes down here, touches, pushes up. This is a double bottom. It's not one that I would have traded. I'll show you why in a second. There we go. And the reason I wouldn't have taken this is because this would have been your signal candle. Your signal candle is right on your first take profit. And it doesn't make sense to take the trade. Okay, let's have a look. We do have one here. Okay, so let's have a look. We enter after our signal candle, which is right here. Our first take profit is right here. Stop is below this first touch here. Now you have to give it some wiggle room, clearly. You know, the low's there. It needs to obviously be more than 2 points below. You need to give it some wiggle room, and this is what protects you. Let's say you give it, I have no idea, let's say we take on this one 7 points, 8 points. Now every pair is going to be different because every pair moves a different amount. So you're entering after your pin bar, your first take profit is here, and then you are looking for significant candles or previous highs. We can't see any previous highs to the left here. So you just take your significant candles. Let me just mark them in as we go. You can see one right here. You can see one right here. You can see one right here. Right here. We've got one here. You're just following up with the stop, so it goes right there. You've got another one here. Stop goes here. You've got one here. Your stop goes here, and then you get stopped out here. So this is why it's important to let your profits run. You know, it takes your first portion of your move to 15 points, but then your second portion can run all the way up to 75 points. If you're going to trade double bottoms and double tops, you are looking to really catch the significant moves. We're just scrolling forward. You can see we touch. Can we take this as a double and top? Not really. If we took this as a double top, your first touch would be here. Lower second touch, but there's no real clear signal candles. We're just having a look, seeing what we can see. You've got one here with the lower touch, and you could take this as your higher touch, but you're trading straight into your first take profit. You don't want to do that. This one is lower right here. I can see it coming down. You're pushing up, coming down. You've got your signal candle right here. And your first take profit is the center right here. Your stop is below the first touch. You're entering, you get triggered in here, the market moves against you, then it moves in your favor. You lock in your profits, and you're doing the exact same thing again. We're just moving along relatively quickly here. You've got one right here. So market comes down into this area, push all the way down, push up, push down, and then we push away again. You know, it's the exact same thing over and over again. What it actually looks like on this one is you could potentially have traded this as a double bottom, and you could have had a double top here. So you could have had a double top here, you come up, down, up, down. It's your first trade, and you exit your first trade and you're into your second trade on a double bottom right there. You know, happens over and over again in the markets. As long as you're paying attention, all you need to do is set your alarms at your pre-identified support and resistance levels. The market comes up, triggers your alarm, the market falls away. You set your alarm back up here again. The market then pushes up. We get our signal right here. This is a pin bar. Our first take profit is right here. And then we are following significant candles or looking for previous lows. You got a significant candle here, significant candle here. This would be your stop right here. And this is likely where you would get stopped out. The market would come down, push back up, and stop you out. And let's have a look. We come down here. We push away. We come back down again. Is our second touch higher? Yes, it is. Do we get our signal candle? Yes, we do. Where's our take profit? Our first take profit? Right here. Market pushes up. You'd likely have closed out here. And you close out here, you take profit, and your second position would get break even, or it would probably get, well, it wouldn't get stopped out because your stop's back here. And you'd either close your full position out here, close part position out here, then the market would move against you and bounce away again. If you did close out on this second part of the position as it moved away, and what do we have that forms? Let me just clear this out for you a little bit. So the market comes down, pushes away, comes down again, and we have another double bottom. There's our signal candle right there, engulfing candle. Our first target is right here, center of the W. The market pushes up, lock in partial profits, and then you're following significant candles. You got a significant candle here, stop comes to here. Significant candle here, stop comes to here. Market pushes up, comes back down, you get stopped out here. And this is exactly what you do. You just do it over and over again. You're looking for the exact same thing. I've shown you everything you need to trade double bottoms and double tops. You come down, you push up, you come down, you make a higher second touch. This isn't ideal because your take profit is going to be here for your first position, and that really is your signal candle right there. Let's see if we can maybe find one or two more. Let's have a look. I'm just scrolling through this very quickly. I'm trying to pick out some for you. Here's one right here. Market rockets up, falls away, pushes back up again. Do we make a lower high? Yes, we do. This is higher than this. Let's just double check. And the high is 7649. The high of this one is 7648.8. Just below, it fits our rules. There is our entry candle. Our first take profit is right here. Market comes down. You're following significant candles after that. There's one here. There's one here. And there's one here. So you get stopped out round about here somewhere. You can see this huge candle would stop you out. Come down. We've got one here. One here. This is lower. This fits our rules. Signal right here. First take profit right here. Stop is above the first touch. And that is exactly how you do it. It's the same thing over and over again. You can see we come down, we push up, we come down. So we went from a double top to a double bottom. The market pushes up into, actually pushes up into your previous support and resistance area. Doesn't quite get into your take profit. This happens. This is what you need to be aware of when you're trading. Every trade is not a winning trade. If you can accept that, you will go a long way as a trader. A lot of people have a lot of difficulties accepting the fact that trading has losses. There's no real way to avoid losing trades in trading. The only way to be a good trader is to win more than you lose, either more trades or more profit. So by that I mean your winning trades, they make more profit than your losing trades lose money. Push up, first take profit is right here. Okay, so we've went over lots. We've used the 1 hour time frame, the 15-minute time frame. It works across any time frame you want to use. Even trading it on the daily time frame, it still works. You can use either the weekly charts or the daily charts for your support and resistance when trading off of the daily time frame. It works the exact same way. You can go and have a look at it. You can go and test it yourself, get good at doing it. The key thing to remember is to use your support and resistance levels as though you can't see the right hand side of the screen. If you do it this way, you're going to get a lot more accurate results, and if you are improving, then it's very likely that you will be improving when you're live trading also. Okay, so hopefully that was helpful, guys. As always, please do subscribe to Decisive Trading if you're learning how to trade. Also hit the like button below if you enjoyed the video. It lets me know that they are being well received. Okay, I'm James Orr, and thank you.